Very significant market, long-term relationships there. Anything that would impact that is obviously of huge concern.
As Canada stares down 35% tariffs from the United States set to come into effect Friday, one Montreal think tank suggests Canada might benefit from dropping all tariffs unilaterally.
We haven't really had a lot of luck with Canada. I think Canada could be one where they'll just pay tariffs, not really a negotiation. We haven't really, we don't have a deal with Canada. We haven't been focused on it.
For the first time in decades, Canada has cut potato exports to the United States by over 40% and instead signed a billion-dollar trade deal with Asia. Overnight, the humble potato has become a weapon in a growing trade war. U.S. families are already paying record prices for fries and groceries, and experts warn this could be just the beginning of a food shock that even Trump didn't see coming. On April 2, 2025, the United States launched a sweeping new tariff plan, adding heavy taxes on imported goods, including Canadian potatoes. By the second quarter of 2025, exports dropped significantly, approximately 40% decline from 2024. Cold storage warehouses in Prince Edward Island and New Brunswick that once shipped non-stop are now sitting half empty. Farmers are already planting fewer potatoes because they know demand has collapsed. In the U.S., the tariff of up to 35% on Canadian goods, up from 25%, applies to agricultural items, including potatoes. A single 25-ton shipment of frozen French fries, which used to cost about $32, now faces an extra $11,000 in import taxes. That means every pound of potatoes is costing 8 to 12 cents more than before. For restaurants and grocery stores, these extra costs move straight to the menu and the checkout line. U.S. consumers who expect cheap fries and affordable food are now paying the price for this trade fight. All of this began with one government decision in April, proving how quickly tariffs can shake the entire supply chain. For American consumers, the potato tariff hit almost overnight. According to the U.S. Department of Agriculture, overall food prices, including potatoes, rose about 3.0% year over year by June 2025, and restaurant prices jumped 3.8%. A bag that once sold for $22 now costs between $28 and $30. For restaurants, a serving of fries that used to cost $3.50 is now closer to $5.25. Minnesota area restaurant owners report switching from Canadian to domestic potatoes after tariffs hit in April 2025, complaining about soggy, low-quality fries and rising costs. One Minnesota restaurant owner told local media that after his Canadian supplier stopped deliveries in April 2025, he had to switch to more expensive domestic potatoes that fry poorly, leaving customers complaining about soggy fries. Chains like McDonald's and Wendy's are also raising menu and wholesale prices due to supplier pressure. Grocery shoppers notice the difference too, as a 50-pound sack of potatoes that once stretched a family's budget is now harder to afford. Low-income families and retirees who count on cheap staples are hit hardest. Those paying $5 to $20 more each month on potatoes and processed foods must cut back on other basics like milk or eggs. Analysts warn the same ripple effects could spread into meat, grains, and dairy, driving higher inflation across more of the grocery aisle. For Canadian farmers, the U.S. tariff has changed everything. In Prince Edward Island, New Brunswick, and Alberta, farmers are cutting potato planting by 15 to 25% because U.S. buyers are placing fewer orders. Cold storage facilities that once ran at full capacity are now partly idle. Farm reporting. Companies like McCain Foods and Cavendish, once heavily tied to U.S. contracts, have reduced potato purchases. This means growers are earning less even though their land and labor remain the same. Warehouses that once shipped bulk containers south are now turning to domestic packaging. Instead of exporting, farmers are packing 5-kilogram bags for Canadian supermarkets. The good news, Canadian potato prices remain steady at $4.50 to $4.99 for a 5-pound bag. shielding families from U.S.-style price spikes. Surplus potatoes are being redirected to food banks and school kitchens, supporting low-income households. Some provinces also subsidize extra purchases, reducing food waste and helping farm incomes. In Charlottetown, a new processing line built in 2025 created dozens of jobs by preparing potatoes for Asian buyers. Exports to Japan, Indonesia, and the Caribbean are giving farmers fresh outlets. While this shift can't replace U.S. trade overnight, it is helping stabilize rural communities. For many, the tariff shock is painful, but also a warning that Canada must diversify markets to survive. Canada has wasted no time finding new markets after the U.S. tariffs. In June 2025, Prime Minister Mark Carney signed a $1.6 billion agricultural trade deal focused on potatoes and processed foods with Asian partners, signaling a major pivot in trade strategy. Japan has already expanded imports of Canadian frozen French fries, giving companies like McCain a big news outlet. Indonesia, with its population of 275 million, has tripled its purchases of fresh potatoes compared to 2024. Thailand has become the largest non-North American buyer, while the Philippines and Caribbean countries are steadily increasing orders. In Charlottetown, a potato freezing plant added a new line for Japanese clients, creating 45 full-time jobs and increasing local potato demand. Farmers who once relied almost completely on the U.S. are now packaging and exporting to Asia, reducing waste and finding new value for crops. Surplus potatoes that were once fed to livestock are being processed for overseas markets. This shift means Canadian farmers are not only surviving, but, in some cases, earning more by selling premium products abroad. Still, challenges remain. The new deals give Canada more security and leverage. Instead of depending on one market, Canada is building multiple trade bridges across the Pacific. For farmers, this pivot is a reminder that resilience comes from diversity, and Asia is now key to their future. Donald Trump introduced the tariffs in April 2025, calling them reciprocal and promising they would protect American farmers. But instead of helping, the policy is now backfiring in ways that even his supporters did not expect. U.S. consumers are paying more for everyday food, from fries to grocery potatoes, while Canadian farmers are finding new billion-dollar markets in Asia. The move, meant to punish Canada, is actually rewarding it with stronger trade deals and new jobs at home. American farmers, especially in Idaho and Washington, have seen some short-term price relief, but higher costs for fuel and fertilizer have wiped out most of these gains. Restaurants and grocery chains in the U.S. are squeezed, while Canada is proving it can live without heavy U.S. demand. This is shocking for Trump because it directly challenges his long-held claim that tariffs always strengthen America. Instead, the policy shows the opposite effect. Canada gains leverage, and the U.S. food supply chain weakens. For Trump's political opponents, it's easy to frame this as a failure of economic strategy. For Trump supporters, it raises tough questions about whether tariffs are really the right tool in today's global economy. The potato story is more than just a trade dispute between Canada and the United States. It shows how fragile the global food supply chain can be when tariffs are used as weapons. Analysts warn that if a basic staple like the potato can be disrupted this quickly, bigger products like meat, dairy, and grains could be next. According to the U.S. Department of Agriculture, overall food prices were already up 3.0% year-over-year by June 2025, and potatoes made a big part of that increase. For American families, this means paying more each week for everyday meals. For Canadian farmers, it shows that depending too much on one export market is dangerous. That is why Canada is moving faster towards Asia and other regions, even if the transition is not easy. The lesson is clear. No single market, not even the U.S., can be trusted as a stable partner forever. For U.S. consumers, the warning is that tariffs can quietly raise bills at the grocery store and the drive-thru. For Canadian producers, the message is to keep building new trade bridges so they cannot be held hostage by one country's policies. The potato has become a symbol of this new reality. Canada's billion-dollar pivot to Asia proves the U.S. may need Canadian food more than Canada needs American markets. Subscribe for more breaking stories on global trade, food prices, and politics, and tell us your thoughts in the comments.